Live at TFNN, the Money Masters.
Let's go to Carlos in California. Hey, Carlos, what's going on?
I want to thank you guys for all that you do for TFNN. I've been a Tiger for over 10 years. Actually, I started listening to you before I even speak a word of English.
Oh, really?
And the thing that captivated me was when you make like, rawr. I was like, wow, what is that?
That is so cool. And where are you from?
Take it serious. I'm from the south, actually the northwest part of Mexico.
I love
right
it.
next to Guayabitos.
Okay.
It's close to Puerto Vallarta.
Okay, cool.
Yes, and I listen from there, and then when I arrived here, I married my wife, and then I keep listening to your radio station.
That's a beautiful thing, man.
It's such a great thing.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. We do appreciate you being with us. Dow right now is up 60, Nasdaq's up 12, S&Ps are up 4. You got gold up 27, the silver's up 43, platinum's up 36. Let's see, copper's up 6.5 pennies, bonds are up 20 ticks. King dollar is down 42 ticks, 79.29. Euro's up 58 at 131, and yen is down 32. Yeah, look at that. Yen gave it back from yesterday.
Yeah. It did that move of a move, and and it works in the currency marketplace too.
No. Now, King dollar. Okay.
Yeah.
Where's
the king has left the building?
No,
is he coming back?
We got to get that crown.
Okay,
we got to get that crown.
Okay, all right.
Because when you're looking at this baby right now, folks, okay, DXH. So check this out. This is kind of cool, actually. So yesterday, he had 36,000 contracts, which it was going into 36,000. So you needed a lower low today with lighter volume and a rejection of price.
So you want to close back above yesterday's low.
Yeah, and we just got the spike. Intraday, it is. No, I love seeing this, okay? So what just happened, folks, is that they spiked it down to 79.19, and you're only up 10 more ticks, but those spikes there is what you need for a rejection.
Yeah.
So it's going to get, and that spike there, by the way, is less than the spike of yesterday. So, it doesn't have to get tested. It probably will, but it doesn't have to.
Right,
so,
right.
We'll see where this baby shakes and bakes. But bottom line is that with Europe being up so dramatically, you bulls out there better get buying real quick. I'm telling you, man. I mean, the bottom line is that, if you look at the S&P, they have, let's see, well, we've got another half hour. You got another half hour to get it going. And if they don't get it going, it'll put some people in shock, because what you should have here, we should be up. Look at Europe. I mean, Europe's up good.
You got the DAX up 118 points.
It's almost up almost up 2%.
Yeah.
So
the DAX is actually, there's a possible ABC out there. I don't have the volume on the DAX, but it is really just trying to get to the 0.618 retracement of the move down from May 2nd. So it has, just a little bit more to go. I think it's 30 points or so, something like that. It's what it's trying to do.
Right. Oh, no, I'm with you. Right.
It's making that attempt. But, I heard before I left this morning they were getting all giddy on CNBC about the Dow, because it's always about the top line number.
Yes, right.
X number of points in order for it to get really. And what they're really talking about, folks, is getting over that May 2nd high.
Okay.
There. And that May 2nd high is 12,876. And, trading out right now at, 12,817. So it's got quite a ways to go.
And it hit the 12,841, right. Okay.
Yeah. So, right now, what the rejection you need there, whether you're a bull or a bear, what you got to be paying attention is the swing points. So you're looking for information.
Right.
That's all. What side of the trade you want to take.
Right.
And so right now you're trading inside the swing point, which is 12,784. So, so that swing point for May 2nd goes from 12,784 up to 12,876. And what you want to see there is a rejection of that swing point. You'd like to be able to see that.
Yeah, no.
And if it gets up above it, it's setting up a 1.618 butterfly.
Yeah.
I'm just like, oh my God.
No,
it's beautiful the way that everything is actually set up, or is setting up. To give us information. That's what I want. That's what I really want people to understand. To me, this is not about being whether I'm 100% bullish and 100% bearish. It doesn't matter to me.
Yeah, I'm with you.
It's really just about the when you get setups like this, when you get to what I call real inflection points, to be able to provide you with information, actually makes trading a lot easier.
Yes.
And it makes it easier for me, because I use the average true ranges, and I can say, I don't need to be, I can set up trades on both sides, and let it pick me up along the way.
Yeah, no.
If it's gonna bust the pattern to move higher, I've got a spot. I'm not gonna, I've got a spot where I've got my bus pass, and it can pick me up and go higher. Same thing on the low side.
I like it.
And it's more difficult to do that when you're in between floors on an elevator.
It is.
When you get to patterns that are supposed to work 70%, that do work 70% of the time, and when they fail, that's giving you a real big piece of information.
You're going higher.
You know what I mean?
Well, depending what side you're on.
It's actually the most. It's textbook trading.
Yeah, no, there's no doubt about it. Now, last night was kind of intriguing. This SanDisk, the reason, SNDK folks, they come out, numbers weren't bad, but a gap down, it's down $5 today. Now, the reason I'm bringing it up is that, you're at, it went right, I mean, really a nice setup, okay, in the aspect that, you had the first high out there, July of 2010, $47. The second high was at 53, which is January of 2011, and the third one was October 28th. Now, when you're looking at this, folks, okay, a valid break topside, this is one that very well could have gone, just what we were talking about, right? You're up there, you're pushing in. And in fact, yesterday on the daily chart, it was actually pushing into highs, and it had some juice.
Yeah, I see that.
And then, boom,
it falls it's got
apart.
more juice right now, just in the first 45 minutes of trading
on the way down. No, but look what's sticking out like a sore thumb.
Now it's orange juice.
Right when you actually look at the highs versus the lows, what you have, there's no juice at the highs, and it didn't have enough.
Yeah.
And when I look at that, that's saying to me, you know what? Because the market is kind of set up like this, and we both know, listen, you can go higher with no volume. There's no two ways about that. You know what I mean? If they're going to basically just push it up, they're going to push it up. But this is telling me that, you know what? It can come out of nowhere, and you're downtown.
Yeah.
So we'll, and I know it's only one stock, but in the context of how you're getting into that area, it's important to understand, particularly because the S&Ps are still having a tough time, which makes no sense, man. But they are.
Well, you can do, one of the things you can start with is just take a look at the financials. I went over just as we were maybe closing in the second to last segment, was just simply taking a look at the XLF.
Yes.
And it's still struggling just at that swing point from October 27th. It's slightly over it. I mean, it was over it by a few pennies this morning. Trading out at 14.24.
Oh, look at that.
And it's struggling. It's struggling to stay over the October 27th area, and then it has a Gartley sell pattern, I think at about the 1480, 1484 range, and it's struggling to even try to get up there.
Yeah.
So the financials may be one of the first places for us to pay attention to. Whether the market wants to truly move, the S&Ps, in order to really move higher, they're going to need the financials to participate.
Yeah, no doubt about it. And if we go look at J.P. Morgan, let's see what she's doing.
Yeah, and I had Jamie Dimon was out this morning saying life is good.
Yeah.
It was good. He was in Davos, Switzerland, and he was enjoying it. So there's nothing wrong with that picture.
Right. No doubt. And so 37,
so it's up over at swing point.
37.54. Right.
Yeah.
37.54 is the number. It's a 37.74, and you're dealing with 76 million.
Yeah. Versus what did it do? Even yesterday with juice, what was
yesterday it did 29.
I mean, geez Louise.
Right. The day before,
less than half.
You did 21. Yeah.
And those are the things, folks, you want to be paying attention to, is taking a look at those stocks and see what they're communicating to us.
Yeah. So you had a full house last night.
We did have a full house.
Yeah.
It was really great. The amount of energy that each of us put into, any of the workshops that we do or what have you. It's great. It's as I was telling folks on the workshop, I don't know who's benefiting more.
Hey, how you doing?
That's right. I love it.
Go ahead. I'm sorry.
So I don't know who benefits more, me or the teacher or the student, because what it forces me to do, forces us to do, is to step back, and as you're putting it together, sometimes you're actually revisiting things that you haven't done or used.
That's right.
For a while.
Or that you even know that are in your head.
That's right.
You just forget. Really.
Yeah.
Right.
And so that part of it is really so cool, and then you just simply get to be able to share experiences. The stuff that I was dealing with or discussing last night is just really things that have actually worked.
Yes.
You know,
right?
I mean, I could probably do a webcast on everything that didn't work too.
Oh yeah,
but I don't want to. You know, I'd rather work on the things that do work. So it was great. It was full.
because you just push the other ones out of the way.
That's
and just keep moving.
That's right.
Yeah.
And for me, the sign of the you know, what I've learned to take a look at as far as one of the signs of the webcasts that are successful is when you get to the end, and at the end, you know, how are people dropping off or what have you?
Yes.
You know, and you know, people weren't dropping off, and you know, just got to the point we had all the people in the office, and after, I don't know, 20 minutes or so, 20, 30 minutes of questions, Q&A, you know, it's kind of like good night. That's all. Close it up. So, and folks, if you didn't listen to it, all of my clients, it's part of it's on their members page, and so you can always go over. You can sign up for my service. It's 30 days unconditional. And the folks that are interested in growing their business, the tools that I showed there, they're going to want to replay it, even if it's just segments. You know, and you should do that for a 30-day period of time.
Right.
You know, just to help you go out there and grow your business. Yeah. You know, so that's really what it's all about. So.
And we're all in business.
We are all in business.
We're all in business.
Yeah, we absolutely are all in business.
There's no doubt about that, man.
Yeah, for sure.
877-927-6648. Give us a call, folks. Let's go see what's high-volume stocks, even though we don't have high volume out here.
What's BAC doing?
You get Bank of America up 5 pennies. Ma Bell's down 65 cents. You got Caterpillar up 326. They come out with numbers. Hewitt Packard's up 13. Let's see. Procter & Gamble's up 25. What is that? Oh, I see. Interesting. I got all the Dow ones up. Let's put the S&P ones up.
So AT&T came out with numbers and disappointed? Is that the,
it looks like what happened with Ma Bell is that it looks like they're paying Apple too much. Let's see. As iPhone, the subsidy cost to iPhone. That's what it's saying. The false shot is iPhone boost subsidy cost. So they're kicking in. Of course, they got to buy the iPhone off good old Apple in order to get the subscription, and it's costing them too much money. Yeah, good old Steve Jobs, beautiful thing.
Well, you know, there was the tool that you were showing me that you found.
Yes.
Here, that actually was, as we were diving into Apple, I don't have to pull it up right now. I remember what. But there's actually a tool, and then you might have talked about it on one of your shows.
No, I haven't yet.
In essence, shows the supply chain.
Yes.
If you will, both from a customer standpoint and a product standpoint. I think it was a customer standpoint too.
It's both.
Which was really cool. I was amazed at seeing some of the distributors that were so huge with inside Apple things. Distributors like Ingram Micro.
Yes.
Huge. It was pretty wild.
And what I got to remember what symbol I pulled up. Yeah. And it's brand new, folks, on Bloomberg. And what it does is this. It's sick what it does, actually. What it does is that you can pull up any stock, 3,500 stocks, and it gives you who the top suppliers are and who the top customers are. It gives the whole supply chain with one button.
That's right.
It's insane. Yep. So you can really, when there's stuff in channels, you can understand, because then you can hit the next button and see what the channel is.
Yeah.
Steve really Rhodes, cool. Tom O'Brien, you stay right there, folks. We're going to be coming right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while actually reducing your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns, making missed opportunities a thing of the past. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We appreciate you growling and prowling out there with us. We get the Dow 55 right now. Nasdaq's up 8. S&Ps are up a whole point, 1.34, which is just pretty amazing.
Yeah.
And, you know, as you're looking, it started with the financials, but it looks like the energy is coming on with a little selling here. So this is going to be wild. I mean, particularly like as we said,
what ExxonMobil's doing, or
you know,
Chevron.
yeah.
I mean, because that you know, you take a look at the energy. Just take a look at those two stocks, and you can peg it.
Yeah,
right. I mean, that was kind of the easy one, folks. If you were trading the energy stock,
that's right.
You just need to pay attention to ExxonMobil and Chevron. You can make your decisions
big time,
because that is a huge weighting inside there.
Oh, it's huge. It's huge.
It's amazing that the weighting is so heavy with just those two stocks.
Yeah. Well, let's see. Last night I was talking with this executive from IBM.
Yeah.
And you know it's going to be cool. I think we're going to be able to get some big dudes on from IBM because.
Oh, that's cool.
Yeah. And you know what he was asking me? He says, Tom, well, what do you think about this Facebook deal? And he says coming out with the IPO and all this. I says, well, yeah. I says, the way I look at it, we'll see what it comes out at. And it was really wild. He says, the way that's valued right now, he says, that's valued at 1/2 the price of IBM.
Oh, really?
Yeah.
Okay, so that's a interesting way to be able to take a look at it.
Yeah, and that's and of course they're talking about it on the executive level. Let's say, okay, how is this? That's what he said to me, and he wasn't, it wasn't questioning it. Well, but he was questioning. He was saying, he said, this is really intriguing that, you can get a company like that versus an IBM. I says, that's telling me that, they better be getting a lot more cash in because that doesn't hold water. Yeah. But we'll see what the numbers are. I mean, it's like Steve Jobs, Apple, those numbers, those margins are so huge. I don't know how Facebook
that's right. Apple's been able to monetize it by deciding what business that they were in, and it had nothing to do with the being in the computer business.
No.
You know, they decided to move into the entertainment business.
And the design business, right?
Yeah.
I mean, you know.
And that's really what it is. It's all about
the cool business.
Content.
They're in the cool business.
Yeah, they are.
They definitely are in the cool business, right?
Yeah.
Last night,
you're in the cool business, baby.
You're too much, man. When we were talking, you know, the all you Apple folks out there, I'm the only, you know, droid in my house, and boy, do these Apple folks attack you. They attack these droid. They're attacking all the droid people out there.
That's too funny.
It really is. And you know what Angie says to me last night, which I'm saying, droids are where it's at. And she says, don't worry, it's only a few more months and you're going to be hooked. Because what happens now, my sister gave me an iPad, and I do love it. Do you know what I mean? There's no doubt about it. You know what I mean?
Yeah, that's cool. That's cool. Now, you had a nice interview yesterday.
Yeah, John Taylor.
Yeah. So what'd you take from that interview?
It's, you know, what happens to me is that when I look at the economy, I am absolutely a free market guy, right?
Yes, yeah.
But it's just not a one-way deal, meaning that we were talking about education, and, you know, and there's plenty of communities that don't have enough education, okay?
Yeah.
And so this is where you know, sometimes I say, well, I want to see those communities get taken care of.
Yeah.
No doubt. Now I want
with assistance.
With assistance.
Yes, okay.
Right? But I want to make sure that it's not one of these deals like when we were growing up, what ended up happening. What I always saw is this, and this is what I think the biggest danger is. And this is why, really, I don't dig Buffett, and I don't dig that whole scene. And this is why. Ted Kennedy, okay, the Kennedys folks in you know, Massachusetts were God, no doubt. You know, John Kennedy I love. Ted Kennedy I didn't. And right. the reason I didn't had nothing to do with him. It had to do with, I felt that he thought, particularly, that you could give someone something and help
and make them be endeared to you or something like that?
Well, that's my point. That's where my head goes.
Yeah.
That what they're really doing is controlling people.
Yeah. So they weren't giving unconditionally.
No, they're not giving. They're not giving the fishing rod.
Yeah.
Do you know what I mean? They're basically taking care of people, and then people have to get taken care of, and that's a bad scene.
Yeah.
So in that aspect, you know, you want that happening. But on the other aspect, I don't want anyone, including a regulator or including the government, you know, telling me what to do. And what I love that what he's all about, what Taylor's all about, folks, is this: is that we should not be told whether we want to eat a banana or not eat a banana, whether we want to. No,
absolutely.
It's up to us what we want to do.
For sure.
Flat out.
For sure.
And I like that. That's really clean to me.
Yeah.
That's, you know, it's just like, hey, we're all individuals, because if anyone can tell you what it's going to do, well, that's all about power.
Yeah, that's right.
You know, it's all about power.
That's right.
And if you can do what you want to do, the bottom line is that does create jobs.
Yeah, it's really great that you bring guys like that on. And you got such clout. All you did was just give him a call, and he jumped at the opportunity.
He did. It was a beautiful thing.
That's right.
You stay right there, folks. Steve Rhodes, Tom O'Brien. We're coming right back.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2 week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Our phone number is 877-927-6648. You bulls better get hold of this market, or you're going to be basically in the red, and that makes absolutely no sense when the DAX is up 2%. We have the Dow right now up 38. NASDAQ is up 1. S&P's are flat. Let's go to Mike in Lakeland. Hey, Mike, what's going on?
Hey, guys. Good morning.
How you doing,
I got to give you credit. Good. I got to give you credit. Back in December when this S&P was at 1010, and you guys said it was going up to 1292. I said, no way. But it's sure enough. But I just want to ask you.
Give him the credit.
The Baltic Dry Index is off 42% this month, 50% since December. So they either have a lot of new ships online, or somebody's. I mean, do you guys give that any credence at all, or I'm kind of curious?
This is what you have, folks, okay? I have the Baltic Index up right now, and what Mike's talking about, now this, well, if you want to see something that is just sick, October it was at 2155, and you're at 784 right now. And this is what this is all about, folks, is what they pay ships in order to deliver product.
Yeah.
And yeah, there's a huge glut, and where the glut is that the glut. Well, first off, you got to remember something, that you have a ship going and coming back, and what's going on is that the slowdown in China is dramatic. I mean, it's dramatic in the context. So all of a sudden, bottom line is that they don't need the iron ore shipments going into China are down 30%. That is a huge deal right off the bat. Bang. And what that does is that jams the shipping industry beyond belief. You know, now will that change? Yeah, it will change. You know, they basically take ships off, they throw them away, they destroy them after they paid a fortune for them.
Yeah.
You know, and what they have done and what has happened is that ships take about 7 years to build, and they all came online last year, and now they have to mothball them. So, you know,
would you consider it a bit of a leading indicator? Maybe?
Oh, it's definitely a leading indicator, man. You know, but that Baltic Index can go lower. They're losing money hand over fist right now. The way the actual rate right now is that they're not even making the cost of gas. They're not even making the cost of gas. Now, normally when that happens, that will change very quickly, meaning that is it bottoming now? It probably is. You know what I'm saying? Because when that happens, then they got to stop. They'll do business for a while, meaning 6, 7, 8 months, not losing money every time. Okay.
Yeah.
But you know, you only have so much money to lose. So.
You know, we enjoyed the interview with that Professor Taylor yesterday. That was good.
Oh, good, man.
Yeah. If I can share with you too, just a short story. Kind of on this. I'm always reminded of this about these discussions. I had a very good professor at UMass, and he was a self-avowed Marxist. My very first day of class, political science class, he asked us all, what is politics? He said, I want you to define it in as few words as possible. Of course, none of us had a clue. And he just said, in the end, I'll define it for you. It's about who gets what. And I challenged him. I said, what are you talking about, who gets what?
Yeah.
I said, I decide what I get out of life on how hard I work and how smart I work. And you know what he said? He goes, you're naive. He goes, I want to know what you think after 4 years of being here. And then I did. I fought him for 4 years. And then he says, well, I want to talk to you when you're 50. He ran for Congress up in Western Mass, and I called and asked him if he wanted any of my money when he was campaigning.
Oh,
and
really?
reminded him of what he said. He didn't want to talk to me. But I'm always
funny.
reminded of that. I mean, and he was a good professor. I couldn't stand his politics. So,
Yeah.
But that's what he defined, who gets what. My God. And there was one other thing, if I can share with you, too. I asked him, I said, could a Marxist ever become elected president? And he said, no. This was like 30 years ago. He said, no. And I said, why? And he said, well, because they could never get through the primary process. He said they would have to lie as to who they could never get through. And I said, well, what if they lie? And he goes, if they lied, he said it wouldn't be long before the country found out what it is. And he goes, the country would come apart at the seams.
Yeah, that's funny.
And
listen, I know, man.
Every day, I'm reminded of those two conversations I had with this guy.
Yeah.
And he was, like I say, he was a great professor. He was great in terms of critical thinking and writing and speaking and what have you. But I'm reminded of that. But that was a good conversation yesterday.
Okay,
so,
man.
thanks.
Have a great one. Have a safe one.
Thanks for calling in, Mike.
You know what's wild is that and UMass is a great school.
Yeah.
Okay. But I had an experience there. Some of the folks know this. This is a funny experience, folks. Well, at the time it wasn't funny, but it was. When I get out of the Marines, so this is 1970.
Yes.
They had a veterans program, and what you did is that now picture this. I'm still only 19, and I'm already out of the Marines.
Yeah.
Okay.
That's
so. So I go to this. And the way it works is that they just kind of get you integrated back into society, basically, right? So I'm in English class. Now, this is the third day I'm at UMass. The third day, okay?
Yeah.
And actually, it's the third day in the second semester.
Okay.
I had already done one semester, and I had,
survived.
Yeah, okay, and this is the third day of the second semester. So this was in January. That's when it was. So I was 20 by then, yeah, because this is... And I was working full time at the same time, and I had my little food cart running around all the places, right? Yeah. So, well, anyway, this English teacher. It was kind of what happened. You get a picture, 1970. Just like now, you get liberals, conservatives. So anyway, this guy is giving all these kids a bunch of crap, meaning that how life is, right?
Right.
And, I stood up. I says, hold it. I says, you're giving these kids a bunch of crap and this and that, and I go on and on. And then he turned, you know what he says? He says, it's evident, Mr. O'Brien, that, you come from a very well-to-do family and your parents are educated and, you've been educated. I look at him, man. I says, man, you're out of your mind. I says,
I'm a street fighter.
I says, I paid my way out of high school. I said, I just get out of the Marines. And I says, you know what? I said, you just did me the best favor of my life. I said, I don't need this. And I walked out and never went back.
Oh, my goodness. I love it.
Isn't that crazy?
Hey.
You know, it's funny how it works.
You and Bill Gates have something in common.
Yeah.
he walked out of Harvard.
Yeah. No. Yeah.
He absolutely did.
Right.
He walked out of Harvard, you know, and he said, I don't need this. Now, you know, he eventually got a honorary degree from Harvard, but he knew that was not the place for him.
Yeah. Yeah.
You know? So,
and he did me a favor.
Which is great. Yeah, when you've got that kind of clarity, that kind of certainty, you know, those are good. A lot of times people get that clarity, but they just simply won't take action on it.
Yeah. Right.
Which is too bad.
It's funny. It's crazy how it works, though. You know, but there's nothing like a good teacher. Do you know what I mean? And I had a couple good teachers. The first, what they try to do, this is funny, too, because they try to fire this one teacher that I really liked.
Yeah.
On the first get-go. And so then I fought them on that, and we got that teacher back. Yeah. So it was hilarious. I mean, it's just funny how it works.
Yeah.
Just like yesterday. Hey, where are you bulls? Where are you bulls? Look at what's going on.
No. Okay, the bigger indicator out there, and we were pointing out, was the New York Stock Exchange. When the Dow was up, I don't know, 70 or 80 points, you had the New York Stock Exchange was down, 50, 60 points. It's down 85 points right now, and which is, the more underlying instrument.
Yep.
Do you want to pay attention to an index that's 30 stocks, or do you want to pay attention to something that's got 3,000 stocks in it?
Yeah, no, there's
that are trading.
Yeah,
I'm going with more the merrier. That's a better party, anyways.
It's the underlying. Well, you know what, King Dollar
and the euro. Yeah, I've got the euro up on my screen. The euro on a 120-minute chart just made a 1.272 expansion, a move, and now I'm kind of watching the candle that it forms here over the next 2 hours.
Look at that. So at this point, you have 15,000 contracts. So what I'd like to see, I want to see it do less than, I'd like to see it do less than 30,000, which will be hard to do. But if it did, that'd be really sweet, because we did 36,000 yesterday. It was going into 36,000. You got it. Now, it's really sick. Now, the original breakout is 79.21. And we hit 79.19.
I know.
That's sick. It really is. It's like, okay, how does this work? Man? Do you know what I mean? So
yeah. And look, when you have all these patterns that set up the way that they do,
patterns are us.
And they are. And look, the thing is that what you'd like to see here, quite frankly, if you were bullish, you'd like to see a pullback. You'd like to see a pullback on lighter volume.
Yes.
You'd like to see these patterns work. Because that's what you go ahead and you trade off of, and and it just sets up your next move. So
we've had folks in January. Okay, every pullback. Well, let's put it this way: when it goes higher, it has no volume. When it goes lower, it has no volume.
That's right. That's right.
So we haven't had a down trip with volume either. I mean, my take is that we're going down there because it has to get tested. But you know what? It hasn't proved it yet. So.
Right. Exactly.
Let's go to Daniel in New Jersey. Hey, Daniel, what's going on?
Hey, how are you? I just want to thank you guys. Trading can be a kind of a solitary life, and with you two at my side on one of my monitors.
I love it. I love
it. You're my mastermind group.
Oh, we appreciate you being out there. How long have you been listening, Daniel?
Well, I discovered you guys by accident about 6 weeks ago.
That's awesome, man. And how? How?
Internet, cruising along. What I was doing is I put in YouTube every day. I would put the date in.
Okay.
Right.
Yeah.
And I would look to see what all the market commentaries are for that date.
Okay.
There's some pretty good people, and then I discovered you guys. And
cool, man.
I don't go anywhere else.
Hey, that's a beautiful thing. Well, we appreciate it. Welcome to the Tiger family.
And there are no accidents. There are no accidents. Huh? There are no accidents in life. That's right. That's right.
That was a nice seminar last night, Steve. You put a lot of hard effort into that.
Thank you.
One of the takeaways I got was in control of the conversation.
Absolutely. Yeah. And the thing is that I showed some strategies. They're really pretty easy to do, isn't it?
Indeed.
When all of a sudden it's just a little shift.
Right.
And that's really what it's all about. It's always just little shifts that make huge differences.
Right.
So cool, actually.
Well,
thanks for attending. I appreciate that.
On a personal basis, for my 19-year-old daughter, I posted on her monitor, whatever you think about, you bring about, because a 19-year-old needs guidance.
Oh, absolutely.
Yeah, that's awesome.
That's right.
And that, it works. That's the thing that's amazing. I mean, it's just everything. We have everything right inside us. It's right in front of us, man.
But what's really great, Daniel, is that you actually, you're taking the action to share that, with your daughter. Because a lot of folks, because it is so important to, for me, it's the same thing. Always with my kids is getting them to focus on what they want, not what they don't want.
Right.
So much, and you can become anything. God, wouldn't you love to be 19 again?
And know this. Yeah.
And know this. See, I'm somewhere. I can't tell how old Tom is. I'm somewhere around that age, and it took me until 40 years old, 45 years old to figure this stuff out,
Well,
exactly.
And there's another thing you want to do out there, folks, depending on how old you are. Start counting backwards. I know I started doing it, and it really works.
Oh, it's fun.
I'm not kidding. So every birthday, I go backwards now.
It's good.
And it works. I'm not kidding. The thing that's amazing that it actually works.
Well, that's what I'm doing with my girlfriend. She's younger every year.
Perfect. Perfect.
I like it.
You're going to have a girlfriend forever. You tell a woman that, forget it. You're all set, man.
Thank you, sir. Thank you. So I'm finding the market's a little stressful these days because they're doing whatever they're doing, but then be that as it may. My question for you is, do you think taking a short-term position in TLT would be wise? It looks like there's a bounce coming. It looked kind of energetic yesterday.
Let's take a look. You get the TLT. The TLT, folks, is the 20-plus year Treasury bond. The low's 88. The high is 125. So if we go over, I'm actually going to bring up the bond first, all right? The 30-year that's trading right now. If you were going to do that, the way that I would look at that is that, this thing looks to me that first, there's going to be fear in the market, and this thing wants to break topside. I wouldn't be going short the bonds for quite a while.
Well, no, exactly. I wouldn't go short, although I'm waiting for that big short.
Yeah.
So I was going to go long on TLT, not TBT, TLT.
Oh, I see what you're saying. Okay. Well,
yeah, it looks to me like there's a short-term bounce. We got, the Bernanke thing going.
Yeah.
Rates aren't going to go down. There's a pretty good, maybe $2 bounce in there.
Yeah, I know what you're saying, and specifically what I said is that I think it's going to go higher, so that that would mean it's up, but I think there's easier trades out there. I like the idea of let the bond go up there, test it, get higher, and sell it versus buying it here.
Sure.
Yeah, so.
I've been waiting for that tested and sell it for a while.
Oh, listen, it's going to be a long while. This thing is, I think that bond wants to go to 160.
Yeah, which is why, on a short swing trade, why not work with the channel it's in?
Yeah, I understand what you're saying.
I'd start surfing for some areas where there's some weakness.
Yeah.
I'd start, because that's going to be the easier trade out there.
Right.
If you start coming into the camp that there's going to be just a retracement, a pullback, what have you, just start looking for some real weakness out there.
You can whack the NASDAQ right now. And the reason I'm saying that is that you got Apple already out the numbers. That's 14% of the NASDAQ. Google, can't get any traction. That says quite a bit, man. And it's like, okay, what's going to propel it? So right off the bat, you're up to 17.5% that there's no there's no surprises out there. No, those two.
Right.
I thank you for your wisdom.
Hey, you bet, Daniel. Thanks for calling.
Have a great one, man. Have a safe one. Another tiger growling and prowling. Now he's got the tigers. He's got his daughter growling and prowling. It's a beautiful thing. Steve Rhodes, Tom O'Brien, all you tigers and tigresses, we appreciate you being out there. We're going to be coming right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Kate Stalter on the Small Cap Roundup, Tuesdays and Thursdays, 11 a.m. Eastern. Up next on TFNN.
That's right, folks. You stay right there because we're going to be in, this is pretty cool. We're going to be in New Mexico with Kate, 11 to 12, and then Tucson with Larry, 12 to 1. This is a great day. And then all the way to California.
That's right.
With Ken Shreve, 3 to 4.
Yeah, and I heard you were talking with Larry about the observatory in Tucson.
Exactly.
Yeah, I guess he's been out there. So.
Yeah, right. We're going to go out there, too.
Absolutely.
We're going to go out there and trade a few butterflies and Gartleys. Totally. Let's go to George in California. Hey, George, what's going on?
Hey, Tom, how's it going?
Going great, man. You having a good day out there?
Oh, yeah, pretty good.
Cool, man.
Nice day out here. Yeah, I'm an amateur out here from Southern California. Yeah, Carlos Lubiati referred me to you guys.
He did?
That's great.
That's a buddy with a Boston accent, right?
From Southern California. I don't know. Does he?
When he called, man, that was so great. It was amazing. It was amazing. Well, listen, George, welcome to the Tiger family, and tell Carlos thank you, man.
Thanks. Yeah, I was wondering on XLF.
Okay, let's take a look at it. We got XLF, folks. This is the financial sector. Lows 10, the high 17. Now, are you buying it or selling it?
Buying.
Yeah, I wouldn't be buying it just yet. What you have right here, George, is this. Now, today you got over the high of the 27th of October. That was $14.17, okay?
All right.
And it's already traded underneath it. And you're going to have lighter volume. And what that means is it's a failure, and these swing points, that's where they talk, walk, and so on. It's the failure at that high. Now, it doesn't mean that, it has to go down dramatically lower, but on a day like today when the market should have been up because Europe was up, a good 1.5% to 2%, that is saying that this baby's going to get a pullback. So I would wait until this gets down somewhere into the $13 mark and see how it's operating at that price point.
And what I would be watching today is let's say the market sells off a bit. On the XLF, if the XLF closes below $14 even, if it closes at $13.99, then and it's doing it on lighter volume that we're talking about, George, is taking a look at that October 27th area, then what you will have done is this will have created a little bearish engulfing candle that will have engulfed all of these little candles up here if you're watching us on Tiger TV, right here at the highs. Now, it gapped up. There's a little gap that's open, which is from January the 19th, 18th or 19th. I can't see the actual date on there. So, let it prove itself to you today before you take any action.
All right.
Okay? But you keep listening to us. You tune in at 9 o'clock when I kick things off, and I'll absolutely teach you some stuff.
Are you watching us on Tiger TV right now?
Yes.
That's a beautiful thing.
That is great. How long have you been out in Southern California?
All my life for about, 38 years.
Oh, that's
cool.
great.
Yeah, you're in a nice place, man.
Yeah.
We like it out there.
Yeah, okay.
Okay, man. Have a great one. Have a safe one.
All right, thanks a lot.
Thanks. Yeah, that's awesome, man, isn't it?
Yeah.
We want to thank all you tigers and tigresses out here.
Yeah.
And look at this market, man. What's wrong with this market?
I tell you, the New York Stock Exchange is saying something's wrong.
Well, what's funny
for sure.
is that, and folks, if you haven't test drove the Tigers Den, come in and test drive. We have a great trading room. Test drive it 30 days for nothing. And we have Bill T in there, and it's really, I love what he always does. What he always does, right? Like, he'd be in there and say, oh, you Bulls better get going. And then, but on the other side, he's going to say, hey, you Bears better get going. On the other side, no, seriously. And it's really cool, man, because that's a fact. You know what I mean? It's like, oh, okay, hey, listen, what are you going to do?
Yeah.
This is amazing. It really, it is amazing.
Is it King Dollar? Is the
King Dollar's on the move? King Dollar's on the move, no doubt.
The King is back in the building?
You stay right there, folks.
Love it.
Kate Stoltz is coming up 11 to 12 with the small cap roundup. Larry Pesavento, 12 to 1. And then, of course, Ken Shreve, and we'll be back here at 4 to 6.
Take care, folks.